Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video. So now traders, let's get fully into business. Today we're going to do some, thanks for clarification, sir. You're welcome, trader. All right, so today we're going to do technical analysis. Okay, we're going to be analyzing our markets, bringing out all our support zones, channels, and everything, and then apply it with what we learned yesterday, which is what? Chart patterns and candlestick patterns. All right, so by the time we are done tonight, we're going to learn quite a lot. All right, we're going to learn quite a lot. That was why I advise a lot of traders who are trying to come in for this VIX training, who have no idea on Forex at all. I just advise them to go for my ultimate guide to Forex trading instead of coming to VIX, because in the VIX market training, I'm not going to teach things from primary. I just want to teach everything. I'm going to teach from advanced level, because I believe everybody here have an idea of what we're doing here already. So you're just coming to advance your skill. All right. So we all know what we use a trend line for, a horizontal line and a trend line. We use it to plot out areas and zones in the markets. All right, that's what we use these lines for. This is our horizontal line and this is our trend line. Okay, so we use these two different lines to plot out zones in the market. Then also we have this rectangle. We use this one to plot out key levels. Okay, you can also use it as support and resistance. Okay, but I mainly use it for key levels. So we're going to be using these three tools tonight. All right, we use it tonight to arrange supports and resistance zones and key levels. Then we apply it with chart patterns and candlestick patterns to know how to take good entries. Okay, so let's get started. So this is the step index markets. All right, step index markets. Go to the 4-hour charts. All right, somebody made analysis today and sent me a screenshot. He said, "Hey Tim, I found support in weekly time frame. I found this in daily time frame." I was like asking, "What are you doing with weekly time frame?" As intraday traders, you don't have any business with weekly time frame. Okay, focus on from daily to 1 minute time frame, because you just want to trade something little from the market for the day and exit. Okay, so you don't have anything to do with weekly time frame. So from the 4-hour charts, we have to plot out our obvious support levels that we can see and resistance levels that we can see in the markets. Okay, so we have this here as our first support level, and a support level is that level where price have tested at least more than 2 times in the markets. More than 2 times in the market. Why is it always important to why do people always say it should be tested more than 2 times? Why not, if it's tested once, you call it support? Now I'll give you a very simple illustration of why it is always important to test 2 times before you call it support. Now, for instance, if we have a line like this, okay, and you have somebody standing on it like this. Let's say this is Mr. John, and then Mr. John is standing on this with just one leg. Is he gonna fall, or is he how do I put it? Is he safe standing with one leg like this? Is he does he have a good support standing with one leg? Yes or no? Use your chat box. No. But when he has, please turn off your mics, okay? Just use your chat box. But when he has his two legs standing, has he gained good support? Is it a good support? Good support. Okay, another illustration. If you have Mr. John like this, and we have let's say a long rope and another long rope like this, and this is Mr. John, all right, and he holds one rope with his hand so he wouldn't fall with one hand, and the other hand he just drops it down. Is he supported? Yes or no? Is he supported? No. But what if he holds the second rope with his second hand? Is it good, supported, or not supported? Yes or no? Yes, good. So that is why it's important that in your chart, while analyzing, you want to make sure that any trend line you bring out has at least two different touches, okay? Because that shows that if the bears push down and gain support to push up a first time and a second time, it tells you that, hey, it means that support zone is a good support level to support the market to go massively bullish, okay, for at least a certain period of time. All right, so that is why it's important that your trend line touches at least two times. But there's something you must also notice. If your trend line now begins to touch even 3, 4, 5 in more than 4 times, you need to understand that trend line, because a lot of people will tell you, hey, when you see it has touched here, touched here, touched here, touched here, touched here, is a strong one. No, what you need to understand is that when your trend line has been touched more than 3 to even 4 or 5 times, that trend line starts getting weak. All right, I always love making this illustration for my students. If you guys watch war movie, okay, where you have the temple gates here, and you have the warriors here, all right, holding the gate so it doesn't fall, and then you have their opponents from the back, okay, all the warriors, all of them in strength with a very big log. They want to push the temple gate down. Now, if they hit the gate 1, boom. They hit it 2, boom. They hit it 3, even 4. What happens to the gate? The gate starts getting weak, isn't it? It becomes weak until it finally falls, right? So that is exactly what happens in your Forex charts. When there is a first test, a second test, a third test, a fourth test, it starts getting weak. So don't mind people who tell you, hey, when it has started 4 times, 5 times, it means it's a strong zone. No, it's not a strong zone again. It's a weak zone. So take note of that, okay? Just take note of that. So we can see clearly that this zone has been tested once. Even on the second time, it was broken, but due to this is where we talk about false breakouts, okay? False breakouts. So then on the second touch, it was tested again. On the fourth touch, 5, 6, 7. And on the fifth one, it couldn't take it any longer. And what happened? There was a breakout, okay? That's exactly what happened there. So, so we plot here out as our support. We want to bring out one on the highest high so far. On the highest high, we want to make sure it's touching somewhere. So support here, resistance here, and resistance here. So far, so good. It's touched only once. 1, 2. Okay, it touched only 1, 2, but it served as support here in the past also. All right. So All this why it was unable to make its way to actually touch a second time until finally it touched here. This is to tell you that this is a very strong resistance zone. All right. Now, a way to figure out a strong support zone, I've told you guys it should touch at least 1, 2. Okay. Another way to spot out a strong support zone or resistance zone is to figure out that zone that pushed markets really high or really deep in the past. Okay, that's another way to figure out a very strong zone. Now, let us look at this. This is a very strong resistance zone. Okay, you see the way price broke out, got and resisted, and the resistance pushed market very deep down. If you look at this, this is about how many pips? Is about 174 pips. Okay, so it's a lot of pips. So this area pushed market very deep down. It was a very strong resistance zone. That was why price was even unable to move to give it a second touch anywhere around here until finally here. Okay, so price was just busy playing around with the support zone. All right, playing around with the support zone, failing to touch the resistance a second time. All right, after this, price got a strong support level that pushed market really high, okay, at this zone, but still it wasn't enough to get to the resistance to break out of it. On the other hand, you must understand that this is a 4-hour chart. You must understand on the other hand that this is actually a downtrending bias market. Okay, it's a downtrending market, so it actually had to respect structure in its way. Okay, it's a downtrending market. So finally, when price got back to this resistance zone in the future, what happened? It was a massive push again, a massive push, and this time around the push was so tough that it had to break out of that support zone. Now, the strength of the resistance, okay, the strength of the resistance plus the several touches of the support that made this support weak, that was why this was enough to push market down. So I just want to open your ideas to really understand how these things work. When you see that area, that's resistant area that push market really deep, okay, and price tries its best to get back to that resistance zone, couldn't get to it, and finally got to it, okay, adding the strength of that resistance together with all the touches that price have touched the support to make it even weaker. That's strength upon strength, strength from resistance and strength from the supports that have made this support weak. That's to tell you that, hey, is a very wonderful one. I don't know if you understand what I mean. This was resistance. Price pushed really deep down to tell you that it's a strong resistance. Price now was busy hitting this support severally. This support automatically has become weak. Okay, the support already is weak. Now to deal with the support in a merciless way, price now found its way to this strong resistance zone again. So at this junction, if a trader is looking at the market, okay, is a difference between support and so at this junction, if a trader just comes right now looking at the market and sees this thing exactly like this, he knows what's going to happen next. A trader is going to know exactly what will happen next, because on a norms, I saw this is resistant, a very strong resistance. All right, and I now saw support has been touched severally here. One thing that comes to my mind is this support is already weak. Now, like it's not enough, and now saw price finally get to that strong resistance again. So if I start looking for my bearish entry, my around here, I will be confident to sell enough, because I know that this time the support is already weak, and now price is coming from resistance again, a strong resistance with full force. So there is nothing that's going to stop this support from breaking this time around. I hope you understand what I'm trying to insinuate now. So this is how you look at the chart and really understand the chart. I want to open your minds to be able to sit down. You can just look at your screen and understand what is happening, even without analyzing anything. Just plot out a support and a resistance zone and look at what has happened from the past, and you'll be able to really understand what the chart is explaining to you.